Good morning. All righty. We got a little bit of a reversal yesterday. Not surprising at some point that it would bounce after a sizable gap down, right down into this major support area that we spoke about. Two prior pivot lows here. So a little double support, if you will, with the two pivots versus say a single pivot over here. So just a larger area of consolidation. But that doesn't necessarily mean that it's strong per se, meaning this had started lower, right, up at the top here and came down and consolidated, which sometimes referred to that as refilling the gas tank, to move to the next level. But if this was up here and this just started, I would believe it would cut through it just as easily because it was the beginning of the move. Whereas if we had a single pivot down here and you still had this sizable move, as you can see, almost 10%, it probably would have stopped there anyway. Many often say, well, how strong is that support over to the left there when they look at it? Well, it's only as strong as, what preceded it. What happened as far as this running up, this strong momentum move getting extended away from support. So even though this cut through here looking like relatively easy, if you took this section and put it up there, I believe it would cut it through relatively easy as well, based on this pattern of how it ran up. So now the question is this enough of a move? Well, in the end, it may be that this is the bottom part of the move. We don't know yet. But a single candle reversal isn't something to hang your hat on as far as a bottom type of a pattern. So even though this is, well, we'll get to where it is when we look at the futures. Anyway, we could see 328-ish or so. It's right about where it was, kind of gapping up a little bit, give or take. So not a big deal. It's not like buyers are coming in and really pushing it significantly higher. So we'll see how the day ends. But I suspect that this will maybe stabilize a bit and then it'll come down here, maybe go lower, or at least what you want to see. Anytime you see an area of congestion like this, you don't want to buy right into it after a vertical move. What you want to see is it try and come up, and whatever kind of a pattern it's going to do, going sideways over here, whether it's a W kind of retest or just going sideways, you want to see it get away from this area. That's the concept of a time correction. This has been the price correction, and we don't know if it's over yet. It's certainly possible that it could be going lower. You see the stabilization here. We'll have to see. It's only Tuesday. We'll see what this bar looks like on Friday. But we want to see this go sideways for a bit. If it's going to hold this level here, as I said, to get away from that, that'll make it easier to get through it. And you say, well, why is that? Well, we've seen V bottoms that go through areas of resistance, but those are not the norm. The norm, just like all charts, are based on trader psychology. And the drop that's occurred here is new in their memories. So as this goes sideways a bit, it builds confidence. Sideways means at some point there are drops and retests and buyers get to step up again. And as chart readers, we get to see those patterns develop. And as the pattern develops, we gain more confidence that this low is going to hold. And for example, if today gaps up and we see a big red bar closing on the low, and then Wednesday or Thursday it's reversing back up again, we've got more evidence of institutional buyers willing to step up in this area. So we need to see that information develop. Qs were pretty strong yesterday. They held up. until things really started to sell off, and then they fell as well, as you can see over here, and then they began to recover, and they recovered very nicely, coming all the way back up into this gap fill area. So while it's a little bit of a different pattern, it's the same situation as that we want to see some backing and filling here. And, ultimately, with this pattern, it looks like the measured move scenario or close to it needs to come to fruition. Now, that's a ways down. So I don't know about it actually getting all the way down there, but it certainly would make sense if the correction would follow through and it would come down into this area of these two pivot lows. So, 1 second. So same story. If this was to hold here, and we want to see this go sideways, getting away from this area. Just 1 second. There's no doubt that this certainly looks like it's going to go lower and touch the 200. The weekly on the rising 20, there is support here. I guess the short answer to all of this is, well, yesterday was the start of some kind of a reversal. The correction, as defined by its continues to either go sideways or down, is not over. So we'll see day to day where it ends up today, and I guess through the end of the week. The seasonality, the theory of September, culmination of the correction in October, we'll see if it all plays out. And as I was looking at this, and especially charts like this is certainly not done yet. And you can see the breakout failure in the transports. They held the area on a closing basis of that pivot low and major support. Deep retracement. Same story. We'll just see how it all shapes up today. Over the next day or two, does it hold here? So, and as I'm looking at the chart, of course, I see things that I didn't recognize or see before, and produces thoughts of, well, what could this do? Right. So even a minor strength over the next several days could form something like this. I don't think, and don't look at this as going out in time. It's not at all. It's just my drawing. It could just stop here. And so that's a thought of something to keep in mind if a head and shoulders should play out here. So when we look at what is, and we look at a high and a low, and you say, well, when we look at retracements, we don't do it from the point of view of thinking Fibonacci retracements. That's hocus pocus kind of mystery analysis that we don't play into. Point is, well, it started the move here and it went up there and it came all the way back there. That's not positive. Now, if we think that this is a low and this is a high and it can get maybe halfway up, that is the formation of a head and shoulders type of a top, meaning that the right side typically is a little lower than the left side, which is a indication of weakness that it couldn't rally that far. And you've got an unfilled gap up here. So that's just something to keep in mind that may play out. If, on the other hand, we were to see this come up here all the way up to the high, well, this was so weak, but it retraced 100% of the decline. We have to respect that, even though we have a somewhat bearish view right now. It's common sense. Right? That's how we do it here, common sense. And when you remove the indicators off of the chart, common sense begins to come to you versus looking at mystery indicators. And let's see where futures are at here. All right, so let's get rid of what we call minor resistance. And we got that pivot high that was created in the middle of nowhere. So as this was going up, the thought was, hey, there's a void here. There's a cluster of overlapping opens and closes here. So it could potentially get up there, but it's created this pivot. Who doesn't know you're doing presentation and rings your phone? That's another story, Mike. So once this is created resistance, we have new information on the chart that says, hey, sellers showed up here. That's going to be a point where they're going to show up again, and it provides us that information to say, well, can it get through that? If it does, well, I see this red bar ignored, maybe it can. So this is now an area of focus as we go into the beginning of the trading day as to whether the S&Ps, the spiders, relative to their level can get through here, or whether it double tops and it just goes down again. And if it does, well, that's our first reference point of support. That's 3 o'clock in the morning. But you can relate that to the level, even if you don't have futures, to see about where that level is, 3260-ish. You look at wherever that is on the spiders and the S&P 500. Ultimately, we can move this now, just as a reference, short term anyway, to yesterday's low. And just based on the range here, it seems likely to me that we would stay within yesterday's range today and consolidate that big move down. So the NASDAQ, you see we get different pictures as we look at different instruments. It covers the overnight trading. And so when we got this bottoming tail bar that's plunged below this support and was able to regain its footing to close back above into this little trading range area. It doesn't mean it's out of the woods, but it's a good sign for buyers that, the forces came back and pushed it back up into here. But the 50 is lurking right up there, which is in alignment with that prior high. So that's your reference point of resistance right up there to see if it can get up to it. Just like we look at red bars being ignored in a bullish trend, it's the same thing with a bottoming tail bar in a bearish trend. So it would be ignored, or a green bar like this being ignored, where it just didn't follow through very much. So in the next day or two, if we don't see any significant upside move from this bottoming tail bar, that's going to be confirmation of this bearish trend. And the Dow clearly looks the most bearish of what we've seen here. Giant bar there to the downside. It's got a tail. And of course, this also looks like today would spend the day trading inside of that range. And so the question will become, or what we'll see eventually is, does it stay in the bottom part of that range? So 27,200. It's like any wide range bar that we look at. We just kind of take a view measurement without exactness and just eyeballing it and say, well, if it's really bearish, it's going to stay in the lower half of that range. So staying down below here, give or take, whatever, that would be some bearish confirmation of this move down. Common sense, retracements, whether we look at from a pivot low to a pivot high and then breaking back down, or we look at a wide range bar, because the top of that bar is a pivot in some lower time frame and the bottom of it's a pivot in some lower time frame. So we look at this as a move. Well, if it can't retrace that far back up toward that high, it's weak. And you can see the head and shoulders here. We covered that yesterday. that's already formed in the Dow. And the Russell, gigantic big red bar. Right? So the odds of getting past 50% of that bar, I think it's relatively small based on what we see so far. You can see intraday, it's really not, well, overnight, it's really not getting very far at all. Even though it's got a void above, it can't even get up to the prior pivot high. Not yet, anyway. Bonds are down, of course. Markets are up a little bit, but overall, just marking time going nowhere. What it'll look like, it's going sideways after a drop. It's staying in the bottom part of the wide range bar. The bodies are down here, which leads me to believe it's going to go back down here. But yeah, it's got to break a low, right? It's got to break some support. You can have a bias, but then you need confirmation, which we don't have yet. Oil, right, holding up here, no big deal. Came down yesterday with the markets, makes sense. Probably going to be an inside day. Probably going to be choppy today. Same thing here with gold. That dropped too, held the bottom of the range on a closing basis. Just chopping here back and forth. Weekly looks pretty good. I mean, from a point of view of it's in an uptrend, I like the fact that it broke down here. I'd want to see what it looks like at the end of the week. But when we look at consolidations within an uptrend, call it a bull flag, call it whatever you want, it doesn't matter. But when I see prices drop below the bottom of the base support and it comes back up again, that's bullish confirmation. So, look at this chart. If this is a low that's held, in other words, we see this come back up and chopping around here, we'll view this as a downside shakeout. But it's got to come back up into the base and go sideways, and that would be a fantastic pattern in alignment with the higher time frame to go long gold. It's going to take time for that to develop. Nasty drop on silver there. So not as attractive as gold, but we'll see what happens here. Right now, it held that pivot low, and we'll see how it recovers or not in the coming days. And we looked at the transports and everything else here, and I just want to take a look at this as a reference point here. That looks weird that it wasn't higher. Is this live today? 22? Yeah, it is. Okay. So it went up and it came back down. So when we look at the volatility index and we think about corrections, which is obviously a lot clearer when we look at the markets, part of our factory work is to say, well, here's the prior swing high. If this market correction continues to the downside, I want to know if the VIX gets up into this area. Anyway, I'll do it this way. And we just simply set an alert there. Let the computer watch, because I'm not going to watch this all day. And so now I've got my alert up there. One of the nice features in this platform is that once you set an alert on whatever it might be, it puts these lines. And if I had one on the bottom, there'd be one. And, rather than having to go in and adjust things, I can just drag it up and down and it moves the alert. So it's a pretty cool little feature on this platform. Anyway, there we have it. The short of this is I think we're in for a bit of a consolidation day, and we'll see how it all unfolds. All yours, Dan.
All right, I was just looking at Target there, and some of my, I had like a top 10 or 12 watch list yesterday, continuation longs. We're waiting for today. Gap up's going to make it a little harder to get in these. Target here, that was one of my favorites. Breakout here, buy setup on the weekly. A couple just from yesterday. Coup is gapping up. That looked great. Crowd, that looked great. And they're continuing higher. GoDaddy had a nice reversal. Plan, T2, LRCX. Yeah, these all still look good. DPZ, maybe put spread. ACI, this was Albertsons. It was a small 1, 2, 3 when it was an inside bar yesterday morning, and you can see it took off into the close, but still in a downtrend. If we could get a retest on this, it's a recent IPO. Obviously, they just went public. Albertsons. That could be maybe a core trade for us. Snow, recent IPO. Have all these bottoming tails. I like watching IPOs. Box L, I saw taken off this morning. That's worth watching. It has room. Keep an eye on it coming out of a coma. You know, so Alex, I remember you asked me yesterday about was XYZ. Oh, you asked me about GoDaddy. Alex asked me, hey, Dan, is GoDaddy what I call a something something bar? It jumps out at you as a reversal. And I said, absolutely. Down 20 bars on support, a big old gap engulfing 200. I said, yeah. And then so this one reminds me of the same. You know, a bunch of red bars. Yesterday was the biggest green engulfing bar. I got a buy setup on the weekly. Any pattern on ticker U? Let me look. So I'm just giving you this as another example of a nice reversal. Whereas a number of these NASDAQ stocks I just went through, the reversal was happening over 2 to 3 week period, creating the turn, and then yesterday being the event bar. It was IPO on Friday, obviously. There is no pattern on the daily, that's for darn sure. It's extended on the 15, but yeah, it's a IPO. You can watch a pullback. Oh, I have it right here. Look, that was my next stock I was going to. All right, Blink. Blink, that was my something something bar last Thursday. Then yesterday, kind of a neutral consolidation day. And now it's blasting up to 935. So the gap's too big for me. That would have been my day trade target, is right there in the gap fill. Yeah, Varun's on my list. So yesterday, I would not call that my event something something bar. Why? Well, because it's not a potent reversal. It might be getting close because it's oversold on major support. But today's gap up, McGraw, if it holds the strength of the gap up, then today is the something something reversal. So I already put it here in this middle window. So yeah, that's worth watching. I don't know what happened on this gap up here. I have no idea. But you know what it actually looks like to me? Because they look like two separate companies. And maybe that's exactly, McGraw. That's what I was just going to say. It looks like two separate companies, and it is. They just took their shell. So we can kind of view this as an IPO. And so I like yesterday's reversal. It does have some consolidation there, but it's still a nice reversal. And I like the 15-minute chart. So that's worth watching. William Twitter, 4028. Yeah, for a day trade, sure. 10, 15-minute high. McGraw also put spread. Sure. YouTube's asking about TTWO. Yeah, that was on my list yesterday. I didn't go through all 10 or 12 of them, but yeah, it made the turn and there's a price for it. Yeah. Apple, you're kind of in chasing mode now. I mean, look how many up bars it is on the 15-minute chart, but that was a beautiful reversal. Well, let me rephrase that. Yes, it's a beautiful 2-bar potent engulfing bar, but it wasn't a fantastic swing unless you're just trading it as a 1 to 2 bar bounce. It is a buy setup on the weekly, but it broke down from 10 bars of consolidation. But I gave it in the green room, right on this engulfing bar as a day trade yesterday. I didn't expect it to move that much. And then also this bullish engulfing on spiders. And that's the Apple had more relative strength than this, but that was the low of the day. And, and I said, the stronger we close, the more evidence it looks like we're going to plow deeper. And that's exactly what's happening pre-market here, where it looks like spiders want to fill this gap today. That's my take. Yeah, all things are up with the exception of Tesla. They got their battery day. The marketers have been busy with that. Yesterday, I said, unless you're just an experienced scalper, I would just stay away from it. It's in the middle of it's volatile by itself. And now you're throwing in the volatility of this news event. If any of you have ever ridden in one of those bars, where you go to those Western bars and you ride the bull. That's what I think of when you're day trading Tesla. This is a bull. You better hold on. That's what that's a picture of. All right, let me continue here. INO. Nice little consolidation here after a big run. GME, yep, is on my list here. Some YouTube's asking about it. It's getting far from the 20, and when I trade gapping trades, I want the pre-market to be very clean and confirm SPT is still a valid trade. Yeah, SPT looks great. And I don't like this pre-market action right here. So not saying it won't set up, but it's not a tier 1. You got to just put it in a little thumbnail and watch it. SPT, yeah, SPT looks fantastic. Yeah, we have that as a long in our advisory letter. Yeah, it's a go. You can buy it right here. It looks fantastic. It's spready though, big old spread. That's the only negative. It's, wow, 22-cent spread. Wow. So trade accordingly, bid for it. But great little pattern. All right, beyond. Robinhood's all over it, really? I didn't do that intentionally. Beyond, it's a buy setup, and it's moving here. It's moving. I know they have earnings this week. I see the fangs and Qs coming in. The Qs are extended here now, folks. Look, on a 15-minute chart. 15-minute chart, that's kind of a gap and crap. So don't, 26, all right, thanks. So don't, I wouldn't be chasing anything here unless it was a beautiful I see all fangs are reversing on the 15-minute chart. And Tesla looks like a short here, a little bear flag on the pre-market 15. All right, let me continue with any gappers. Jake, this was a recent IPO you sent me an article on, and I said I liked it over the green bars high. I don't know what's making it gap down today, but that's a big bearish retracement on an IPO stock. VCNX, that's something's wrong with that. That's getting in trouble. This little guy, it's a big percent gap up, but the 15-minute chart's holding incredibly well right here. Stop under $1 or so. That's not really my type of, I don't like trading dollar stocks, but that's holding well. AIM, little gap breakout there. That's worth watching. I think it had earnings. Varum, October 16th is a long way away, but I like the fact that that's really far, and your stop still is yesterday's low. But I like it. Stop yesterday's low. Make sure it doesn't have earnings. $11.11. I just checked, so you're fine there. Yeah, it's a definite candidate. WB had earnings, and that's going absolutely nowhere. Walmart. I would say